Good morning, everyone, and a warm welcome to this joint ICAS and RSM webinar. This webinar is an opportunity to find out more and ask questions about the future of narrative reporting by charities. I'm Kelly Adams, and I'll be guiding you through this webinar today. I lead RSM's public and third sector offering in Scotland, and I'm also a member of the ICAS Charities panel. In today's webinar, you will hear from my colleague at RSM, Nick Sladden, who will speak about RSM's recent research about how charities are responding to the rise in sustainability reporting, mirroring developments in the corporate world. You will also hear from members of the academic team about their Phase 2 findings and recommendations from ICAS-funded research into impact practice and reporting by UK charities. In Phase 2 of the research, the team focused on how charity funders view impact reporting and how charities are currently communicating their impact to external stakeholders. I'm delighted to be joined this morning by our three speakers. First up, Nick Sladden. Nick heads the RSM Charities team and he advises on audit, assurance and financial reporting. He's an audit partner for our top 250 charity clients. Using his 25 years experience in the sector, Nick has developed RSM's in-house guidance on the Charities SORP, FRS 102, as well as responding to Charity Commission and Oscar consultations on financial reporting developments in the last few years. Nick holds the Diploma in Charity Accounting and has completed the Governing for Non-Profit Excellence programme at Harvard Business School. He's also a trustee of RSM's own charitable foundation, as well as being a school governor. Dr. Alpa Danani is Reader in Accounting and Finance at Cardiff University. Her research interests lie primarily in accountability in not-for-profit organisations such as charities, NGOs and universities. She is the leader of the Interdisciplinary Perspectives on Accounting Research Group at Cardiff University. Alpa has produced commissioned work on not-for-profit research, and her research appears in various international journals, such as Critical Perspectives on Accounting and the Accounting, Auditing and Accountability Journal, among others. Alpa currently serves on the editorial boards of the Accounting, Auditing and Accountability Journal and the British Accounting Review, and was recently appointed to the ICAS research panel. She also served as a board member and chair of the Black Association of Women Step Out, a Welsh charity that specialises in Black and ethnic minority victims of domestic abuse. Dr. Elena Varutza is a lecturer in accounting and finance at Cardiff University. Her research focuses on management control and performance measurement systems. Elena has experience researching models and frameworks used to measure and report performance internally in various organisational contexts. She has published her work in professional outlets and international academic journals such as the Accounting, Auditing and Accountability Journal and Industrial Marketing Management. Elena is a trustee and the treasurer for the Management Control Association, a micro-charity promoting research and scholarship in the area of management control and performance measurement. Welcome all to today's webinar and thank you very much for taking the time to come and speak to us today. So before we begin, just a few housekeeping matters to remind you all of. So you can submit questions at any time through the live Q&A facility, which can be accessed at the right-hand side of your screen. Questions can be submitted anonymously or only to the presenters for this webinar if you wish. We won't identify who questions come from. Please also join the conversation today through the discussion forum, which is also accessed at the right-hand side of your screen. The forum allows you to comment or discuss with fellow delegates on matters covered by this webinar. We are recording this webinar and will make it available for on-demand viewing afterwards in case you want to refer back to it or share it with others. The slides for the webinar will also be able to be found alongside the on-demand video. Both the recording and the associated documents will be available at icas.com/webinars. Everyone on the webinar is automatically muted, so there is no need to be concerned about background noise wherever you are. We look forward to receiving your questions throughout the course of the webinar, and of course, we will try to get through as many as we possibly can. For now, I'm going to pass over to Nick for the first session. Thank you.
Thank you very much, Kelly. Hi, everyone. So over the next 20 minutes, I would like to just share what we're seeing at RSM in terms of emerging best practice in the charity sector, relating particularly to ESG reporting. So just for clarification, ESG is environmental, social and governance, as I don't think we've mentioned that so far. So as you can see here, I'll be covering a little bit of theory as well as the findings from 2 research reports that we have completed. But it's not all theory this morning, as I shall also be sharing some practical examples and tips as I go through the presentation. So just by starting as an introduction to ESG and ESG reporting specifically, so my comments here are really more about ESG and ESG investing. And what I wanted to do in sharing this chart with you is to show the net funds that are flowing into UK ESG investments. As you can see, every month since 2019, so just before the pandemic, except for September last year, has shown a net inflow in billions of pounds into ESG investments. It was the financial shenanigans in September 2022 with the brief Prime Minister and the budget that almost was that caused the outflow in that month. You can see the segment on the chart that is going south. But overall, it still amounted to approximately £20 billion worth of net investment that was going into ESG funds in the last year. So to me, at least, it seems ESG matters, particularly to the investment communities. But turning to charities and how might that be relevant, we recognise that a lot of focus for ESG for charities was just about that. It was about how charities were investing with ESG in mind. And only a minority of charities, of course, are in such a fortunate position to be able to decide what they do with their investments. So at RSM, we decided to undertake some research into what it means to think about ESG in the wider role of a charity. So yes, some charities have investments, but all charities should have activities, beneficiary interaction, and many are also employers, fundraisers, and work with volunteers. So we wanted to think about ESG in a more holistic way. And I think this was consistent with our work that we undertake as external and internal auditors to the sector, where we audit 1 in 4 of the top 250 UK charities. We've seen ESG as a hot topic with charity boards, and it's been high on their agenda. And in other areas and developments, particularly around reporting, what we've seen is that where the larger charities are doing something, that can become the norm for smaller charities over an extended period of time. So it is important to recognise some of the practices that larger charities are undertaking, even if you might be a smaller charity yourself. So where to start when it comes to thinking about ESG reporting for charities? Well, one place is to look at existing reporting frameworks. So these may only apply to certain types of organisation, certain size of organisation, such as companies with the large company reporting requirements. But what you can see from some of the ESG frameworks that are out there, they do report on certain non-financial or ESG information. And I've just listed a few requirements that apply here that you can see on the right-hand side. And as I say, some of those are requirements based on size of the organisation, but also type of organisation as well. So as I say, there's plenty of ESG frameworks out there, which are not necessarily designed for charities. Some of them I can name: IFRS Sustainability Disclosure Standards. There's the Sustainability Accounting Standards Board. there's the Global Reporting Initiative. There's just a few examples. Another good example is the Sustainable Development Goals that are set by the United Nations. This is another example of a framework. And I wanted to share this particular one because it sets goals across a number of categories for many purpose-driven organisations. And they've chosen to align their ESG communications to one or more of the Sustainable Development Goals, SDGs. And I think that's a really effective way to show how your strategy and organisational purpose can impact across a range of topics, and you can select which topic may be applicable to your own organisation. So, for example, if you were an education charity, you might align to goal number 4, which is about quality education. That's sort of fairly natural selection. But you might also consider goal number 10, which is about reducing inequalities, or goal number 13, which is climate action through increasing climate change within your organization. And the good thing about the United Nations framework is that it's broken into objectives and indicators that can further assist a charity to show your impact and purpose across the sustainability debate. That's just one example of a framework that I wanted to share, but there's plenty out there. So why is that important for charities? So I've included here the legal definition of a charity in England and Wales, but the same is comparable for Scotland and indeed Northern Ireland. So at its core is charities existing for public benefit with those two aspects. So public being a sufficient section of the public, so the charity not existing just to benefit one individual person, but taking it to its extreme, the charity existing to benefit the whole planet. And then the benefit section, which, as well as providing all the good things that might be aligned to your charitable purpose, there is an element that is recognised in law around the benefit also should include no detriment or harm, and that shouldn't outweigh any benefit of the original purpose of the charitable organisation. So, in other words, there's not much use if you're a charity that is doing a lot of good in a particular area, if that same charity is, say, a significant polluter and damaging the environment on a wide scale. And that's an example of how it's becoming a responsibility for us all, not maybe just just defined to your beneficiary class. So all charities could use this reasoning to help, say, in the climate change emergency debate, on the premise of assisting in public benefit. So next section of my talk, I'd like just to share some of the findings from the research that we've undertaken. So as I say, we decided to undertake some ESG research into how the charity sector is doing on its ESG journey. And we believe our research at the time was unique in the sector. So what did we do? So we analysed, as you can see here, ESG reporting across 114 charities 2 years ago, and we reviewed annual reports. We looked at websites and any detail that we could find on the public record across each of the ESG themes. And then we repeated the same research across a slightly smaller sample, most recently this year. This is the first time that I'm sharing the results of the 2023 research. And we can now make comparisons and see what trends are happening across the sector over that 2-year period. So the first area of focus was whether a charity had included an ESG section, either on its website or in the annual report. So was this a clearly defined section, say in the trustees report, or was there a separate web page on the internet site? So as you can see, no charities in our sample from 2 years ago included a separate ESG section. However, what we did find that was 23% did include a section that could be referenced to ESG. So that might be including activities that, once you got into the detail, looked at areas such as, say, diversity and inclusion, the environment, or wider sustainability disclosures. So whilst there were no specific sections for ESG, there were plenty of ESG disclosures, and where that was the case, we counted those in, and about 23% 2 years ago we're doing that. So rolling forward to the more recent research, that's increased slightly, as you can see, up to 27%, so slight change over the 2-year period. But we also found that there were still no charities that included a separate section either in their annual report or on their website. So we next looked at environmental reporting, the E and the ESG. This mostly centered around organizations in our sample that were required to include environmental disclosures. So that was typically carbon reporting. So larger companies, larger charities, generally with an income of more than 36 million. But we also considered whether environmental reporting was more widely happening in our sample. And you'll see that 15% of the charities that we looked at did have some form of reporting on the environment. And again, not much change really, a slight increase to 19% in our more recent sample of the research we undertook this year. So I'll come back to our assessment on what we think of environmental reporting in charities at the end. So the social aspect, we looked at public benefit reporting. So clearly charities have a social cause and an objective to achieve that. And as expected, we had high hopes for this particular section, the S in the ESG, and that was borne out. So 98% of the sample 2 years ago were really good at explaining why they provided a public benefit and their charitable purpose. And although it says on the slide there, England and Wales was 98%, we had similar results for the sample that included Scottish charities and organisations. And that really continued into the more latest research, so slight change, 97% due to different sample size, but broadly, really in terms of the ESG, charities are hitting the mark for the S, as we would expect. And then governance. So what we did when we were assessing governance was to see if charities were reporting against a recognised code. So typically that might be the Charity Governance Code, although we did consider others, such as the Code of Sport Governance. And again, we had quite high hopes for the sector and the research to be hitting this mark. And we expected it to compare favourably to corporate entities. So yes, whilst listed entities have governance codes, that's generally not the case for SMEs and smaller owner-managed businesses. So I think the charity sector really could be quite proud of achievements in the governance area. And as you can see, about a third were reporting formally against a best practice code on a voluntary basis. But I think it's fair to say we were slightly disappointed with what we found this year. So we saw a bit of a drop really from a third to a quarter that were claiming to be following a voluntary governance code. We thought about why that might be the case. And I think 2021 was about the time of the last major change to the Charity Governance Code. So it was receiving a lot of press at the time, probably high on charity agendas. So it was in the sector news. And I think perhaps since then, maybe interest has waned a little bit in terms of charity governance and reporting frameworks. So a bit disappointing, really, to see that drop this year. So if you're thinking about your own ESG journey, where might you start? So whilst that does depend on your organisation, obviously very much about what stage you're currently at, and what you want to achieve, we've got here hopefully a step-by-step list of key actions that you might want to take. So starting at the first one, I've put there working group. So the first point for me really on an ESG journey in a charity is assembling the right people. So it's likely that within your organisation, so if you're a small charity, could be amongst your trustee board, if you don't have employees or extensive use of volunteers. But it's likely that you might find someone that is really engaged and passionate, say, for a range of sustainability issues, such as the environment. And I've seen clients assemble working groups, perhaps headed by senior leaders with a range of attendees, really just to give a basis for a discussion and actions that you might want to track as a group for accountability. In a small organization, that might just be a single trustee that is championing the cause. Secondly, it's about sort of starting and looking at what you're doing already. So complete a review of what you're doing, self-assessment. So it might be that you've got policies in place for equality, diversity, and inclusion, but it's likely that you're not going to be starting from a sort of zero base. There's likely to be things that hit the ESG agenda that you're doing in your organisation. It's about just bringing them together and identifying those. And then step three, where do you want to be? What's your target? So, do you want to be the best in class? Do you want to be leading the world on your charitable ESG journey? Or actually, are there just a few areas where you think you can improve, some easy wins? You know, can you identify as a weakness that haven't really been considered up till now? So that might be, say, reducing energy usage and committing to a percentage, or even committing, say, to net zero. Then step four, once you've sort of decided what you've got, where you're trying to get to, it's about thinking about board and trustee endorsement. So that's good to formalize and embed what you're trying to do with your ESG agenda. And then moving on, step five. So think about maybe if you haven't got the resources to do it yourself, it could be that you can collaborate with other partners in order to develop your ESG journey. And then six, reporting back, as I've said, included a few examples on how you might do that in terms of websites and annual reports. And then seven is more about monitoring. So it's not going to happen overnight. I'm sure we've all heard that ESG is a journey, but there will be limitations initially in terms of what data is available to you to monitor, say, gender pay gaps or diversity. And this process recognizes this. So I think if I've got any advice, it would be to concentrate on just a couple of areas and have accurate data and meaningful actions to improve than it is to have something to say about every measure. And then repeat the process really from one year to the next so you can develop your ESG journey, as I say. So just wanted to, on the next few slides, share what we're seeing in terms of best practice. So picking off ES and G, starting with the Soil Association. So within this particular report, as you might expect from their charitable cause, they were very good on the environmental disclosures. But what we liked about the Soil Association when we looked at their report was that whilst their environmental causes are intrinsically linked to their operations and strategy, they do have limited resources. So what was really good about this example was that they partnered with other organizations, their suppliers, and so on, so that they developed alliances and partnerships with funders as well, so that ESG was on the agenda of their everyday journey. So what about if you're a charity that is not necessarily, say, concerned with the environment? So a good example is the Children's Trust. So this has been a long-term journey for the Children's Trust, and there's a good timeline here to explain and really illustrate that it's been a matter of years where they've tried to improve their environmental aspects, and they give a good description of what they've been doing over that period of time. So not necessarily a charity that is set up for the environment, but one that is considering it in terms of its ESG reporting. I'm also using the Children's Trust to show what can happen in terms of reporting purpose. So they're very good at describing what their strategy is across 5 themes, the aims, associated actions, and the monitoring that they do to show that impact reporting. And that was something that we particularly liked in terms of being able to explain that charitable purpose. And then my last example is across governance. So we picked out WaterAid as a good report. So what was good here again was that it wasn't just something that was static from one year to the next. So I mentioned that the governance code went through a significant change in 2021. And what WaterAid were really good at was recognizing the changes to that code, which were mostly around diversity and inclusion, and they developed their governance plan in that year and appointed people to consider what they were doing in those areas and then report back in subsequent annual reports. So I thought that was a good example of how a charity was actually developing its objectives and aims in the G on its ESG journey. So I hope that's given you a bit of a flavour really in terms of some charity examples, and just wanted to really give you my sort of report card, I suppose, for the charity sector and ESG. So where would we place charities overall in terms of ESG? So I think, broadly we've seen disclosures improve. So we're seeing sort of 23% of charities now having moved up to 27% in terms of ESG reporting as a whole. But if we break it down into those component parts, I think for the environmental disclosures, the jury is still out. So yes, there's some legislation, the carbon reporting, for example, and we have seen a little bit of an increase from 15 to 19% around environmental matters in the last 2 years. But I think there's still a long way to go in terms of disclosures in that particular category. The S, as I say, this is as expected. The public benefit of charities is being delivered, and it's being really well explained. So a big tick for the S and the ESG, and similarly for the G. I think it's pretty good. As I say, the charity sector compared to SMEs is pretty good on governance frameworks, although there has been a sort of slight tail off in the last 2 years. So I hope we're not waiting for another big sort of charity scandal before governance gets back into focus. So I think a bit of work to do on the E of the ESG, and maybe a little bit more work to do in terms of explaining ESG as a concept and tying it all together in annual reports and websites. But as a whole, charity sector is doing pretty well. So in terms of takeaway points for your own ESG journey, I think it's important to get commitment from the top. Find out who is that champion for your ESG journey. Decide where you want to go. Do you want to be best in class? Do you want to just sort of make some easy wins to begin with? And then look at what you've got. So what data do you have within your organization? What frameworks might be particularly relevant to your organization? As I said, there's plenty of frameworks out there. Pick the one that is most suited to your charity. And then finally, our reports are available on the website at RSM. So do reach out to Kelly or myself, but you can scan this QR code once you receive the slides, and I've got the website link there, but you'll be able to download both reports and get into a bit more detail into our ESG research. So that's all from me for now, and I'm going to hand over to Alina. Thank you.
Thank you, Nick. Hello, everyone. So we will now move the discussion on charity impact reporting practices. Alpa and I will present our research findings on the topic. So in this project, we had 2 objectives. Firstly, we examined the extent to which charities reporting practices are useful and desirable to their funders. We conducted 14 interviews with corporate funders, public sector contractors, local authorities, and independent grant-making foundations. The second objective was to examine the extent that charities disclose their social impact and their nature of such disclosures. We analyzed the reporting practices of 21 charities. We had a wide breadth of charitable activities, and we included charities of varying size, scope, and institutional complexity in order to ensure that we capture the diversity of the sector, as this may influence disclosure patterns. The analysis focused on trustees' annual reports and also voluntary standalone annual reviews or impact reports. So what we know so far from the literature: charities operate in environments shaped by the expectations of multiple and complex stakeholders. Among these stakeholders, funders are a key group with high accountability expectations. Funders can come in different shapes, such as governments, local authorities, philanthropic foundations, and individual donors. but they all have a common desire that funding is adequately accounted for and used in a prudent way that will work towards the achievement of the charitable activities and outcomes. Financial information and audited financial statements, although recognized by the funders as crucial to accountability, are perceived to depict only a partial picture that fails to capture charities' effectiveness. Literature observes an increasing pressure on charities to demonstrate and report on their effectiveness and programs, whereas a further but slow shift to impact data is observed. Relevance and usefulness of information collected for funders is identified as one of the challenges that charities now face. This is especially in cases when the assessment is mandated and funder-driven and designed. Tensions are reported as such requirements might divert charities from their mission. But if there is a collaborative relationship between the funder and the fundee, which is based on trust, flexibility, shared mission, and communication, then the assessment for funders is not only accepted, but can also generate information perceived to be relevant to charities and important to their internal decision-making. Charities face hurdles in their impact assessment and may require resources and funder support, as impact assessment might be harder than outcomes assessment. Charities call for better support, such as training, resources, peer support, and learning to enable them to embark in their impact journey. One study notes that charities often work together with their funders to develop their infrastructure, whereas in New Zealand, a study identifies some early evidence of alignment between funders' requirements to further support charities. In terms of our findings, in this research, we found that all our interviewees argued that impact practice is important, and they require performance reporting to confirm their initial funding decision. Funders also see impact reporting as a learning mechanism, as they can identify what works and what doesn't work. A number of funders noted that charities' transparency on impact information instills confidence, showing the funders that the charity is prepared to evaluate their own practice and be open about the impact they are seeking to achieve. Funders look for different reports at different stages. For the sake of brevity, we consider funding as a three-stage process. During the initial approach and inquiry, funders examine the trustee annual reports and other filings that are required to be made. But when funding is specific to activities and programs rather than general funding, then the trustee annual report becomes secondary, and the focus is on the formal application, which often raises questions: what difference our funding make, and how will you measure it? As funders must understand why the suggested activities for which the charity seeks funds will be helpful and why it will lead to success. But as some funders do not accept applications and instead they identify themselves the charities they wish to support, impact information made publicly available before an approach for a grant is quite valuable. During the funding period, funders communicated that they want charities to succeed. Meaningful relationships enable trust-based funding, sometimes downgrading the paperwork to a backup role. The relationship often includes an allocated funder staff member, site visits, calls, regular informal conversation, all of which can alert the funder to emerging issues that might need further support. At the end of the funding period, we noted a variety between accountability for large national programs and those receiving small grants for short periods or one-off projects. For some national programs where an external impact funder undertakes in-depth evaluation to inform future policies and funding, specific staff may be more interested in detailed case studies. For small grants, funders require less data as they recognize that they are not the sole contributors of impact, but still enough data to attain a reasonable level of assurance about how that money was spent and the impact it had. Funders express a desire to become better funders and streamline the process by, for example, pre-populating forms for the charities application. This also assisted charities who appreciate general guidance as to what is required, rather than beginning again with a blank form. A notable observation is that the aspiration of impact reporting is also taken up by funders themselves, especially those who wish to measure their own theory of change to recognize their societal impact, and they're making significant investment in their capacity to undertake impact practice. We talked to funders who promote and offer unrestricted funding and highlighted that charities should utilize further these funds to develop their impact practices. However, an internal cultural change might be needed. Even funders who do not offer unrestricted funding, they had previously provided funds to develop their grantees' impact practice, either as an one-off fund to all of their funded charities, or as a funder plus, where alongside funding for a specific charitable activity, they offer an amount of money specifically for the impact practice development. Such programs encourage charities to think more deeply about the impact they aspire to and to consider how best to engage in impact measurement. Hence, an important part of these funders' approval processes is determining the charity's capacity for development and willingness to engage in impact practice. And I will now pass it on to Alpa to continue with the presentation. Thank you.
Okay, good morning everybody, and thank you, Alina. So my section will be focused on the reporting by charities on impact, and then also some recommendations to finish off with. So just to give you a quick overview of prior research into charity reporting, charities have traditionally tended to offer background information to enable users to understand the context in which they operate, but performance and evaluation disclosures have been fragmented. Charities also prefer to present their information around activities and performance information in their voluntary documents that accompany the formal trustees' annual reports, for example, impact reports or annual reviews. These documents have also tended to provide more detail than what charities provide in their trustees' annual reports. Annual reviews and impact reports have also been deemed to be more user appealing than traditional trustees' annual reports, both in terms of structure and content. Some studies have also alluded to practices of impression management, whereby charities tend to be selective in their reporting, emphasizing the positive attributes linked to performance, including stories of individual cases. Practices over time have improved with greater focus on output initially and then more recent outcomes-based information. So to conduct our study, we drew on the long-established input impact framework, focusing specifically on activities, outcomes, outputs, and impact. And we categorized information in the documents we analyzed in accordance with these variables as appropriate. So not only did it allow us to capture practices of impact reporting per se, but also allowed us to compare them relative to reporting practices of the other variables within this framework. And as Alina has alluded to earlier, we examined trustees' annual reports, voluntary documents, the nature of the impact recorded, and also engaged in our analysis over 2 reporting periods. So moving on to the results then, starting off with disclosures in the trustees' annual reports. We started off by capturing whether charities reported impact information, so the presence of impact information in the trustees' annual reports. And in each of 2020 and 2021, we found that 63% of our sample provided some form of impact information. However, when we compare that relative to the other variables in the input to impact framework, impact reporting was marginally lower than the other variables. There was a slight improvement in 2021, but on the whole, impact was less recorded than the other variables. When we compare our results to prior research, however, that have recorded fewer than 10% of charities reporting impact, the 63% outcome is very promising. This comes with a caveat. We identified a number of charities that we've referred to as incidental reporters. They appeared to be presenting impact information potentially incidentally, for example, as part of a case study or a testimonial from a service user. Moving on to the extent of coverage, so here we looked at the volume of disclosures related to impact. We compared that to volume of disclosures relative to the other variables in the input impact framework, and only 5% of the disclosures were linked to impact. The other 95% were linked to other aspects of the activities, outputs, and outcomes information. And this was the case for both 2020 and 2021, with a marginal improvement in 2021. However, what we do want to point out here is that a small representation of impact information may not necessarily indicate weak reporting practice. A charity may, for example, have provided extensive activities information as background, but then they may have disclosed the impact information in a succinct but nevertheless a meaningful way. So moving on to the trustees' annual reports, the voluntary documents, here we see better reporting, both a higher presence of impact information in these documents and also a slightly higher volume of disclosures. A key point, however, to recognise is that not everybody produces voluntary documents, and of those organisations that did, when we compared their trustees' annual reports to their voluntary reports, we found they disclosed more impact information in the trustees' annual reports, which we see as quite an interesting finding, both in terms of actual practice. More is devoted to the trustees' annual reports, but this also contrasts what prior research has shown. Moving on to the nature of disclosures, here we distinguished between quantitative information and qualitative information. Qualitative being testimonials or case studies of individual service users, quantitative being surveys or other forms of quantitative information. And what we find is that with impact information, there's a heavier weighting on qualitative information than quantitative information. So there seems to be less of an approach to collect information on an aggregated basis. And this may be down to the resources constraints and expertise constraints that charities face in relation to impact reporting. I have a couple of examples here, but I'm conscious of running out of time, so I'll move swiftly on to the recommendations for charities and then funders. So funders value impact information, as Alina has said, and charities should consider embarking on this journey. As Nick said with the ESE framework, it is a journey, and stepping gradually into this journey is a good starting point. Also, funders suggest that trustees should be engaged in this process, and this is also reinforced by our Part 1 findings, where charity personnel, charity managers also felt that trustees should be involved more with impact practice. Charities should try and maintain a balance in the form of quantitative and qualitative information when reporting on impact, and also balance in terms of abstaining from overemphasizing positive news performance, as it may threaten stakeholder confidence and legitimacy. Finally, there may be scope for charities to engage in subsector collaboration and co-develop impact measures and data collection processes. Finally, some recommendations for funders based on the findings that Alina shared with you earlier. Currently, output-related data is critical to funding decisions, which means that impact reporting is an additional mechanism for charities' performance evaluation. We encourage funders to move from output-based information to impact reporting, and we also recommend funders can clarify their expectations. They can support fundee practices by guiding them through interim reports, training, and so forth, and also ensuring that impact reporting is proportionate to the level of funding provided. Funders should also support charities to build capacity, and as Alina alluded to, this can be done through unrestricted funding or the funding plus model that some funders have adopted. Funders may also have opportunity to learn from some of their charities practices who are leading on impact reporting, and they can then use this knowledge to support the development of grantees' evaluation practices more widely. And finally, Alina alluded to funders engaging in impact practices for themselves to demonstrate the difference they're making to their stakeholders, and we encourage all funders to overtly recognise the impact of their own activities to then nurture it amongst their grantees. And finally, at a sector level, we see scope here for umbrella bodies to bring funders together to develop best practice guidance for grant holders, and also standardise reporting formats to the extent possible to streamline charity impact reporting. Thank you for your time.
That's great. Thank you very much to all our speakers. We've now got some time for questions, so feel free to continue putting your questions into the live Q&A box. In the meantime, speakers, you'll be pleased to hear I've got a couple of questions here for you. First up, we've got one for you, Nick. Should all charities be looking to develop a sustainability or ESG strategy, or would you consider this to be too onerous for very small volunteer-led charities? So this comes in the context that in Scotland, around about 2/3 of the country's 25,000 plus charities do not have paid staff.
Thanks, Kelly, and thanks for the question. So I think for me, in deciding how far to go on an ESG strategy, it's really about meeting the expectations of your stakeholders and being aligned to your stakeholders' expectations. So you kindly mentioned in the introduction my role where I'm a school governor. So one of the things that we've been considering recently is the replacement of a very old boiler which is going to cost quite a bit of money. But actually, is that the right way to go? Is that what our stakeholders, particularly the children that we're educating, but the parents as well, is that expectation there should we just simply replace like for like, or should we actually be thinking about the extensive playing fields that we've got and using, say, solar powers to heat the school? So it's probably about embedding it into every decision that we have as a board, but really trying to sort of bear in mind the needs and the expectations of our stakeholders. And I think there's probably, that extends into funders as well. What are the funders' expectations as to what you should be doing as a charity? So, I'm also work with you, Kelly, on the RSM Foundation, and we make grants. And I think if we got 2 grant applications to us, and one was aligned to, say, the strategy that we have on the environment and ESG matters, and the other one wasn't, that could sway our thinking in terms of how we might select a recipient for funding. So yeah, in summary, stakeholder alignment.
That's great. Thank you very much. Okay, one for the research team as well, just coming in. So I'm not sure whether this would be Alpa or Alina, possibly Alpa. In undertaking the research, did any of the charities themselves recognise that there was a risk of only conveying good news in their impact reports? And if so, do you have any examples of how they addressed this risk?
This is a really tricky one for charities because the tendency is to share good news. However, I think speaking from sort of a funder perspective as well, funders recognise that things go wrong, and they're increasingly valuing charities recognising that, because these can be presented as learning opportunities. So funders are keen that charities learning from engaging in things that may not have worked. So the tendency then for charities is to welcome or to accept that, that they can actually report less good news stories as well. So I think the balance is changing, and it's been prompted by funders.
That's great. Thank you very much. And another one for yourself, actually, I guess it links into the question that Nick was just asked as well, just in terms of, is impact reporting something that the smaller volunteer-led charities should aspire to, or do you think that some charities are just too small for this to be worthwhile? What's your view on that?
Yeah, so again, this is something Nick alluded to earlier, the extent to which smaller charities can adopt practices of the larger ones. So this is a really difficult one. Impact practice is actually quite resource intensive, quite sort of called on expertise. So in our opinion, it's not possible for all charities to have sort of standardized approach, and we wouldn't expect very small charities to engage in the same level of impact reporting as some of the larger ones. But what we've also found, and this perhaps alludes to some of the report 1 findings, are that depending on the activities that charities are engaged in, it may not be necessary for them to report on their impact. The fact that they're sort of addressing a need is in itself recognition of engaging in impact, and a lot of the smaller charities we found in the first phase are engaged in on a need basis, so the impact is almost implied.
Okay, that's great. Thank you for that. Another one coming in for yourself, Nick. So someone looking for any tips for smaller charities looking to develop their first ESG or sustainability strategy?
Yeah, I think there's easy wins really. So the first tip would be to find that champion, someone who's really sort of a champion for the ESG cause, and really get it onto the agenda of either your trustee board or any subcommittees that you might have. I then think, an easy win is look at what you're already doing. So actually, do you have a policy, say, on diversity and inclusion? Is it something that you can draw in from what you've already sort of developed over the last few years? So there's likely to be easy wins there, but also in undertaking that sort of initial self-assessment, you might uncover a few gaps in terms of sort of some obvious ESG matters that are fairly easy to plug. I think as a small organisation, I would also look around collaboration as well, working with your funding partners or even your suppliers to help you on that journey. I think that's important because obviously you're going to be resource constrained. And then when I think it comes to reporting, I would really keep it simple. So, I mentioned that in our sample, there were no charities that had a sort of specific page on ESG, but I think if I was a small charity, I might have, say, a pop-out box in my annual report that is headed up ESG, and then simply reference to where you're already making those disclosures. So with the social aspect, it's likely that you've already described your activities and social value and purpose somewhere else in the report. So simply just cross-reference it. So I think for a small charity, you could have a pop-out box in your annual report that takes up a quarter of a page. You could cross-reference to some areas, and you might want to include some additional disclosures that are not otherwise covered. But that would immediately give a user of those accounts, potentially a funder, a bit of comfort that you're on that journey.
Brilliant. Some easy wins there. Thank you. And just the final question then again, back to the research team, back to ALPA. So do you think that the annual reporting cycle is an inadvertent barrier to charities developing impact reporting? And if so, what are your thoughts on how this could be overcome?
So this is something that we've definitely seen. Some charities are engaged in activities that sort of have an impact over a longer term period. So the annual report can pose a constraint in this sense. So an example of this, health charities, so where patients need longer term treatment, or some of the environmental charities where some of their projects run over multiple years to generate any significant impact. So what we found is that these charities tend to rely on their voluntary documents on a more regular basis as a way of discharging their impact reporting, and then they can control when these reports are actually published. So they're not necessarily done in accordance with the annual cycle, but they're done in accordance with the length of their projects and the time period to demonstrate their impact.
That's great. Thank you very much. Very useful. Okay, thank you for that. That's us almost out of time. Thank you once again to our speakers for joining us this morning. Please remember that you can keep up to date with the latest information, guides and resources through ICAS.com and also RSMUK.com as well for all your financial reporting, tax and general practice areas. ICAS also has a technical help desk for members which covers audit and accounting, tax, practice support, anti-money laundering and ethics. So just a couple of final slides. We've got here for you some events that are coming up, some ICAS events. So we've got the Chartered Accountants Worldwide Beyond Accounting on the 8th of June, Beyond the Numbers. This is an event that's being streamed by the CAW network, and it covers several topics, including artificial intelligence and risk, ESG reporting, and the future of audit. On the same date, we have How We'll Achieve Our Ambitious Vision for ICAS's Future. That's a webinar about ICAS's 2030 strategy. On the 13th of June, we've got Dealing with HMRC Inquiries, which is a practical session, and the 15th of June, Resilience Under Pressure. We do also in-person event on the 31st of May, which is the ICAS Digital Practice Conference, which is being held in Glasgow. And links to sign up to all these webinars are available at icas.com/events. So it only leaves me to once again thank your speakers and of course you, the audience, for joining the webinar today. I do hope that the content of the webinar has been helpful to you, and it'd be great to receive your feedback on this webinar and to hear about any future topics that you would just like us to cover. So thank you for joining us and goodbye.